Hey guys, what's going on? Coming at you with a early Thursday morning video. Before I get into this video, make sure you like, subscribe, comment below. Really trying to get to 600 subs, before the end of next month, let's call it, because I don't think it's going to happen this month, but let's try to get to 600 subs. Hitting that subscribe button really helps me out. If you haven't watched my videos before, I'm a long-term investor. I believe that's the best way to gain wealth. And really today I wanted to just kind of mix it up and talk about really all the big tech earnings that came out this week. You got Facebook, you got Google, you got Microsoft, you got Amazon, you had PayPal, you had really all these big companies post their Q2 earnings. And basically all the big guys, like big tech in general, they all beat earnings. They beat EPS, they beat revenue. They really all did great. But if you look at almost every single one of them yesterday, they all, or the ones that came out, yesterday or the day prior, they all corrected, they went red. So usually when companies beat EPS, earnings, revenue, or Apple's a good example too, they killed everything, but they all went down. So if you're not familiar with earnings or how it works, is a lot of people think that day trade or do call trades, they guess you think Apple's gonna beat earnings, so oh my God, it's gotta go up. That's your natural instinct. If you think they're gonna beat what analysts think, then the stock's gonna go up. Well, everything's priced to such perfection in basically the S&P 500 and all the big tech guys. So if you look at the forward PEs of Yardeni and stuff like that, Yardeni Research, the forward PEs of big cap, which is over let's just say $400 billion, it's way overvalued right now. Everything is so rich in price perfection. So that's exactly why I haven't been buying Google. I haven't been buying Amazon. I haven't been buying Facebook. I haven't been buying any of those guys. And if you're subscribed to me, you would notice I haven't bought any of them recently. I am in Amazon. I am in Facebook. I am in Google, and I am in PayPal. So I am in them, but I haven't been talking about them much because I haven't, really they're all overvalued in my opinion. Really the best value buy right now is small caps. If you look at the Russell 2000, really the PEs are fair or actually a little below. They're really getting hammered. So that's really where you want to, buy right now as a long-term investor. You get the best deal, and then when it rotates into small cap again, you're really going to see some massive gains and benefits. So they all beat earnings. They all lost some share price. They're all priced to perfection, which is why that happened. I think these big tech companies are going to cool off. They're going to correct down the fair value. I don't think they're going to run up crazy anymore, which is good if you want to get in these. It's just not, in my opinion, a good time to buy any of them. Cash, I put $2 signs. So really that's my main focus right now. I really want to focus on building up my cash for what I think is going to happen in the fall, especially the early fall, the end of August, September, beginning of October. I really think the Delta variant is going to scare a lot of people. They might require masks. They might do partial shutdowns. They might stop fans from going to stadiums because football's coming up, basketball. Really football in particular. That's a very big. It's a very big sport in America. Obviously the biggest. And if they shut that all down again, it's really gonna take the wind out of some people, and people are going to probably panic again, thinking, oh my God, this one spreads more, it's the worst. But really how I look at it as a long-term investor, if that happens, it's really giving you a second opportunity. Maybe you missed the first time when the first in 2020 in the fall or the spring when it really hit, when the market was crashing and you're oh my God, the world's coming to an end. You should see now, okay, if that happens, take advantage of it because it's going to happen. They're going to come out with a vaccine. They're going to figure it out. I don't know if that's going to be in the next months after or 6 months or a year or whatever, but I do think at some point in time it will, people will come through and that's that. So really take advantage of the situation as a long-term investor. Now, if you're trading on margin, if you're doing options, if you're doing day trading, I don't know if it's a good idea to really bet on anything. And that's why I don't like doing it, because you really don't know what's going to happen short term, and it's super unpredictable what's going on right now. So you just got to tread with caution, basically. So game plan. So this is what my game plan is. Obviously, I'm building cash, right? So I'm just going to hold cash. If any company I own corrects, let's just say most of them, below 10% of my cost base, right? Whatever my cost base may be, I will start slowly add money into that stock. And then if it goes down to like 15, I'll add more, 20, I'll add more. This is all below my cost base. Because really, as long as the fundamentals don't change in the ones I'm in, I'm gonna keep adding. It's like getting a discount. So that's really my game plan on what's gonna happen. Most of my big positions are fully built out. So I'm really in a good situation because I slowly chip at it. I never really put all my money in one shot. I kind of buy stocks 4 to 10 times throughout, like whenever I see like a dip or see an opportunity. So most of my stocks are 80% built out, if not over 100 where I wanted them, like Tattoo Chef. You know, I really wanted to have X amount of dollars in it, but I'm really at like 110% or 115%. So I'm 15% over what I want, but the opportunity when it was at $15, $16 a couple months ago, I really couldn't resist. Like I had to do it. So I did it, and now it's floating at like the 1950 to 2050 range. So clearly that was a great time to buy. I don't regret it. I'm up, $5, $6 per share I put in. So that's, kind of my game plan, just collecting money right now. That's going to be my approach. Obviously, when I buy something, I will make a video and let you guys know what percentage I bought and what stock I bought. I don't really plan on selling anything. Some stocks I did get out of recently, like it was a turnaround. It was, I got out of Spirit, and I got out of something else too recently. Oh, I got out of Texas Roadhouse. They were both turnaround plays for me. However, if we go on lockdown again, or Spirit or Texas Roadhouse, or even like Cheesecake Factory, if they get down remotely close to 52-week lows again, I will gladly redo what I just did. I have no problem doing that. I don't think it will go that low because people will see that pattern. It's too easy to predict. But if it does get to a certain evaluation, I will rebuy in. So I kind of sold in the spring when everything was real hot and coming back up and there was euphoria. So I really timed that perfectly, in my opinion. So I'm out, long-term gains. So I don't pay a lot of tax. I really sold it basically at the peak. I bought it at basically the bottom. So that was pretty good. So, long plays for those guys, like the restaurants and airline business. I don't really have too much interest. I'm more into like tech, futuristic things, renewable energy. So those are the ones like I'm really, like space, like I'm really holding on to for like a 5-10 year. That's like my vision. That's why I want to build my portfolio out too. So long-term wealth, that's really how you really get it going. So that's kind of my approach. That's my game plan. Big tech obviously had great earnings, but they all went down. So it just kind of gives you an idea. Also, the Fed spoke yesterday about raising rates. They said they're not doing that. They feel like they have control of the situation. They said inflation's a little higher than they thought short term. Nothing really new. They did say they will start probably raising sometime in October or November, which is what I thought. I think it's all transitory. I still believe the Fed. So, I kind of really nothing new today or yesterday what happened. So that's all I got, guys. If you guys like this video, it's a little different. Make sure you like, subscribe, comment below. And until tomorrow, peace.